Hey YouTube, welcome back to Brad's Bread and Butter. Nice to have you with us again tonight on Friday Live Show. And what are we talking about tonight? How to buy Bitcoin and Ethereum tax-free. As always, anything you can keep away from that tax man, it's a good night. But more importantly, we're going to spend a fair amount of time tonight on ETFs. Oh, crypto ETF versus a bank ETF. And can you put it in your TFSA account and your RRSP account? Wow. So what are you doing on Friday night? Hey, good to have you with us. So you want to save some money here on this channel, and especially when it's free. Yeah, nice to have you with us again on Friday night. All right. So what is an ETF? Oh, how does an ETF work? What is a bank ETF? And how about crypto ETFs? Yeah, did you know they have them? And taxes on your investments in banks and crypto. And then for you that stay around to the end, we have a bonus. Yeah, I am going to give you my top 9 ETFs to own in 2022. Yeah, so stick around. This is what we're going to talk about today, ETFs. And do you know what an ETF is? Welcome to all our subscribers. Nice to have you with us. Thank you. And if you could give us a like, thumbs up, that would be really good. I appreciate it. And also, if you have subscribed, don't forget that on Monday nights, we give away some free money, right? Yeah, so stay tuned so you learn on Monday nights how you can get some money from Rachel and I. All right, so if you haven't subscribed, do it please. And if you hit that bell, you will know when we are going live and when we produce a new video. And I would really appreciate if you leave some comments. I've had some people personally email me and say, hey, I like this, like that. But leave it in the comment. I'd like to know what you think, especially today, because we're going to talk about ETFs. And I've heard more and more people talking about ETFs lately. So do you know what it is? Are you in on the deal? Hey, it's Brad. Welcome back to Brad's Bread and Butter, because today we're talking about ETFs, banks, and crypto. So as always, since we're going to be talking heavily investment today, please, before you make any decisions, this is a disclaimer that this is for information and entertainment purposes only. I don't have a license as a financial advisor, and so I don't want you to do anything rash. Make sure you do your own research, okay? So I am not a financial advisor. I don't have a license. All right, let's dive in. What does ETF stand for? ETF is an exchange traded fund, and basically it's a basket of funds. So we can buy a whole basket just by buying one ETF. So in this video, I'm going to refer to some different ETFs only for the purpose of understanding how ETFs work. So an exchange traded fund is a great way to achieve diversification in your portfolio, because one of the biggest mistakes of investors, or especially swing or day traders, is they begin to over concentrate their stocks in a different or in the same sector. So they get all doing all the research in one sector, and then they start buying all their stocks in there. So what is an ETF? I have an ETF here. Cookies, yeah. So a box of cookies is a good exchange. Now, I'm not Forrest Gump, box of chocolates. No, but if you can understand an ETF is like a box of cookies, right? So we're going to refer to the box of cookies here in a minute. So what is the difference between mutual funds and ETFs? Well, both mutual funds and ETFs offer you the convenience of owning multiple stocks in one package without you having to research every individual stock or having to purchase each stock. So in both mutual funds and ETFs, you achieve a great diversification in your portfolio, and you avoid over concentration in one sector of your portfolio. Both mutual funds and ETFs are professionally managed, but for this professional management in a mutual fund, you're going to be charged around a 2% of your account balance every year for a management fee, which is automatically deducted from your earnings in that account. Now, I'm just going to stop here for a minute because I heard the other day a funny conversation that I have heard more than once in the last couple of years. And so I just want to dispel a myth. I should have put that in the title of this video too. Myth of management funds. But I'm going to say it this way. So the argument I kind of went like this. Hey, I make 10% on my mutual fund last year. It's a great mutual fund. You should buy it. The other guy says, well, what was your management fee? And he went, well, it was 2%. And the other guy went, yeah, well, in my mutual fund, I only paid 1.5% management fee. And the other guy said, well, what did you make? And he went, well, I made 8% on my mutual fund last year. And so I went, these two guys are actually clueless. Did you know that? Yeah. They're arguing about a management fee. Now, why? Because legally in Canada, when a mutual fund company advertises their annual rate, so the guy that said he made 10% and the guy that said he made 8%, those have to be advertised with their management fees in. Now, what do I mean by that? That means that the guy who made 10% and had a management fee of 2%, that mutual fund actually made 12% last year because they have to deduct the management fee when they advertise. The guy who made 8%, they actually made 9.5% because they had to deduct their 1.5% management fee. Okay, so that is very important to understand because I hear people talking, oh, management fee, management fee. Now, I'm going to explain it a little bit better in a minute, but just for now, I wanted to go over that important point so that you understand that fees, they make a difference, but not here, okay? All right, so I got just a little distracted there because it was a funny conversation I heard the other day and I laughed. The guys asked me, why are you laughing? I went, you guys don't understand management fees. All right, but for some management in ETF, the same management actually in an ETF, you're only going to get charged 0.04%. Wow, what a difference, right? And you'll probably have a yearly trading fee, okay? So, which is a big difference over the years. This fee can add up to hundreds of thousands of dollars. All right, one of the major differences between mutual funds and ETFs is the buying and selling in mutual fund. Regardless when you request to buy your shares, your buying or selling order will be executed at the end of the trading day. All right. Doesn't work for day trading and swing traders, right? So, hey, you see your fund or whatever is up and you put a sell order, not going to be actually executed till the end of the trading day. Okay, so you cannot control what price you actually put your order in. Big thing to understand. In ETFs, you can buy and sell your share at any time when the market is open. So that could be an advantage because it actually increases the liquidity and the opportunity to sell instantly. For instance, if the market has a spike, or you could buy if the market presents you with a dip in that one day. But because of the human nature, most people have a tendency of gambling a little bit. And to cut off this gambling impulse, a good strategy is to limit orders for buying or selling one predetermined price instead of using a market order. All right, so I just want to explain a little bit before we go on now about those management fees again, okay? So here's a little story. All right, suppose your wife says, I need to go shoe shopping. My wife never says that. Just kidding. I love my wife, and if she wants to go shoe shopping, I will. You go into the first store and your wife sees a lovely pair of red shoes and she says, I want to try them on. So they're $100. So, you really don't care the color of the shoe, but you care about how much you're going to fork over. So the manager's hovering around and you lean over and you say, hey, that's $100 shoe just for fun. How much did you pay for that shoe when you bought it? And he said, I got it for $50 from my wholesaler. So he's charging $100 and he paid $150. So he's making $50 on the shoe. And I'm thinking to myself, I think we could go to another store and get that shoe a little cheaper. So she likes the shoe. She tries it on. It's good. And I say, honey, let's go over to this other store because I think maybe we could get a better price there. So off we go. We go into the next store and we see the very same pair of red shoes in there. But these ones are $80. And I say to the manager, as my wife's trying them on again, to look in the mirror, hey, I just out of curiosity, because I'm a businessman, I see you're charging $80. What was your cost on this shoe? He goes, oh, he said, I got a great deal. I bought a whole container of them and I got them for $20. All right. Now, I have a simple question to ask you. What shoe are you going to buy? The $100 shoe or the $80 shoe? You're going to buy the $80 shoe. Do you care what the guy who bought them made? One guy bought them for $50. The other guy bought them for 20. One guy made $50. The other guy made $60. Do you care? No, you care that you bought it for $80. You saved $20. That's how I equate management fees in mutual funds. Remember, as always, you pay for what you get. So I don't mind paying a good management fee to the guy who's going to do a good job in managing the mutual fund or the ETF for that matter. So again, but remember, ETFs, the fees are a lot lower. All right. So let's carry on with our description of ETFs. All right. So an ETF will be divided basically into two big categories: market ETFs or sector ETFs. A market ETF is an ETF that mirrors the performance of the different stock markets. All right, I'm going to get my cookies. Okay, so in a market ETF, let's say that you want to buy something in the Dow Jones. Did you know you can't buy a Dow Jones? You can't buy a piece of Dow Jones. No. So what they do is we will make an ETF that will mirror the Dow Jones. So a company will make an ETF. Here's the Dow Jones. And they will buy certain stocks within that will then mirror the Dow Jones. So I think that today I want to buy an ETF with this cookie in it. Yeah. And so I'm going to pay the guy who's going to actually go to the Dow Jones and buy an ETF. Guess what? I don't have to pick the stock. I get to eat the cookie. So I got a stock basket, which is an ETF that mirrors the Dow Jones. Hint, DIA is that ticker. All right. So it's an average of Dow Jones stocks under DIA. Oh, I love my cookie. Can't talk. Impolite talk while I'm eating my cookie. All right. There are ETFs for the S&P 500. There are ETFs for the NASDAQ 100. There are ETFs for the Russell 2000. So those are what we call a market ETF. It's just going to mirror the stock market. As you know, the stock market goes up and down. There are fluctuations. But over the last many years, as long as I've lived, it's all going this way. It's going up, right? So I don't have to worry about where the market goes up and down. My ETF is just going to mirror this constant trend of going up over the years. Yes, we have 2008s. They go down. But then we have the bulls, right? And it goes up. So that's why we like to buy an ETF, because somebody is managing that for me. They did all the research for me. I'm going to pay him. That's his fee, right? But that's the cool thing about an ETF. All right, this market ETF just mirrors the four major markets, and they have a huge daily volume, and they're considered the most liquid ETFs. All right. Now, we have sector ETFs. Okay. Bring back my cookie box. All right. So what is a sector ETF? Well, let's say you want to invest heavily in the tech sector. So here's my tech sector, and in there they will put some stocks of tech. Okay. So again, I'm paying some guy to do all the research about what tech stock is going to be in my tech stock ETF. All right. So now I get one cookie box for tech, I get another cookie box for health, and I have an ETF. So you can get health sector, home building sector, banking sector. We might talk about that one. All right. So when you look to create a proper diversification in your portfolio, you need to have your investments in different sectors of activity, because when tech is down, you don't want to be eating that cookie. Okay, so you want to be in health because it's staying good right now. And then that's why you have an ETF. Okay, so you want to make sure that you're diversified in your ETFs. So being negative in your portfolio, if the tech sector is down, doesn't really matter because your health will be up. So because sector ETFs are focused on specific sectors, they require more research and management. And that sector ETFs are more expensive than the market ETFs with just mirror the market averages. Okay, so those are important points to understand the difference between ETFs. Now, I promised you a little bit about the banking sector. So here we go. All right, in Canada, everybody was for a long time talking about the big five banks, right? Well, by the way, recently, now they're talking about six. Okay. So the big six is now the Bank of Montreal, which has a dividend of 3.61%, right? The Bank of Nova Scotia, which has a dividend yield of 4.54%. National Bank has a dividend yield of 3.48%. CIBC, a dividend yield of 4.49%. RBC with a dividend yield of 3.61%. And last but not least, TD with a dividend yield of 3.68%. So now, imagine for me, you have, through watching our channels, know that, hey, a bank stock is good to have in your TFSA because they are for the whole long term, right? Why? Because not only does the bank stock go up, but they pay a dividend. Okay, so if you want to buy one share in each of these banks, it would cost you around $700. And maybe this month you don't have $700 to put in. Ha ha! ZEB.TO is a bank ETF which gives equal weight. That means that each of these banks have an equal weight on the ETF, which means it's between 16 to 18%. Cookie time. All right, here's my bank ETF, right? Here is my Bank of Nova Scotia. I think I'll have a Bank of Nova Scotia cookie. I like doing these videos. It was a great idea to have a cookie for bank stocks. So, in my bank, ZEB.TO ETF, I can hold several of the big banks, whatever that ETF has had, and they have between 16 to 18% of each bank. So, why is that important? Well, excuse me, it takes a long time to eat a cookie. Shouldn't eat and talk. I love cookies. All right, remember we did a video a little while ago about Evergrande? And they have missed a bank payment. And guess who owned them? Royal Bank. Up to 100 and some 15, 18 million, I think I saw the number. And probably they will not be getting that money back, which means Royal Bank might take a hit, right? If all I owned was Royal Bank, I might be in trouble. But with an ETF, I hold equal weight of all of the big six. So ZEB.TO, a good way. So with that same $700, if I would have bought each of the stocks, I now own 18 shares of ZEBO instead of having one share in each of the big six banks. Again, what a good way to diversify. And also, ZEB.TO has a dividend yield of 4.77%, which is slightly on the highest side of the individual banks. How do they do that? Pretty cool, eh? Another bank ETF that is pretty cool is ZWB.TO. This ETF is around $22.35 per share, but it has a dividend yield of 6.41 paid monthly. Wow, how do they do that? ZWB.TO is what we call a cover call ETF, because this ETF sells cover calls on the fluctuation of the price of the big six banks. So this ETF owns their share on the six big banks, and they sell call options. Now that's a whole nother video for another day, okay? But they sell a call option on this stock. So for this reason, that's why ZWB.TO can offer a yield dividend of 6.41%. Now that's compared to a 3.48%, which is the average of the big six stocks dividend yield. Isn't that cool? That's like double if you just bought the stocks. So 3.48 compared to 6.41. Much better dividend yield. Okay. So that's a cool thing to know. So good exchange fund to own as well. Now, last but not least, you know I like crypto, right? Is there a crypto ETF? And yes, there is. I thought you'd never ask. All right, crypto ETFs are a very important part of your portfolio for several reasons. It gives you exposure to cryptocurrency in your portfolio. Again, remember, one of our 3Ds, diversification, okay? Everybody knows that you hold the cryptocurrency in a wallet in different exchanges. And for a lot of people, they worry because of security on this wallet. I'm sure you've all heard horror stories. In case they get hacked, or if the exchange goes insolvent, or if the coin declares some sort of bankruptcy or rug pull, or the owner of the exchange passes away. Have you heard that story? Yeah, one of the owners of the exchange died, and with him, he had all the password codes. Those people lost a lot of money. All right, so other unfortunate events. Okay, or you can hold your crypto in your cold wallet to make it a little safer. But when you want to trade, now you got to move your coins from your cold wallet to the exchange and then into your bank account. As soon as you do that, what happens? Yeah, Mr. Revenue Canada gets his hand in your pocket, and you're going to pay not only the fees for moving around, but now you got to pay taxes, which also cuts on your profit of your ETF. Okay, so BTCC.TO is a Bitcoin ETF, which is backed up by real Bitcoin. Okay, so this BTCC.TO ETF is backed up by 10,100 real Bitcoins, which are held in cold storage wallets by Gemini Exchange. Now, they are actually holding around 600 million, meaning that you are only insured for about 1/3 of your holdings. But it's a lot better than the zero insurance you would get by holding your crypto on an exchange platform. All right. So another good reason to buy an ETF. The bigger advantage for Canadians, though, is the fact that you can get crypto exposure in your TFSA and RRSP. Now we're talking about no tax. Okay. So you get the advantage of free taxes in a TFSA, or even not quite as good, but better than nothing, is tax deferment in your RRSP. So BTCC.TO for Bitcoin and ETHH.TO for Ethereum are the two best crypto ETFs, which you can hold in your TFSA or RRSP. BTCC, I'm losing it. BTCC and ETHH, you can trade only when the market is open again, okay? So you can't trade on weekends or like crypto coins. So many of you will hear, and I'm reminding you in the link below, in the description down below, you'll find our link for Wealthsimple. And you know that that's one of the reasons I like Wealthsimple, is because you can trade crypto anytime. Stocks, yes, in the stock side, only during stock market hours. But crypto in Wealthsimple, if you're just doing crypto, you can trade it 24/7. But the minute you turn it into an ETF, now it becomes like the stock market again, and you can't trade on weekends or nights like you can crypto coins. In all the exchanges, you can trade Bitcoin for Ethereum or other crypto coins, but not in an ETF. Okay, so inside your ETF, you can't change Bitcoin into Ethereum. Can't do that. You have to sell the Bitcoin, then go buy the Ethereum. Another little downside to the ETF, but I'm trying to give you both sides, right? So everybody understands. So I just want to read you something here. But just before I do that, I just want to make sure you understand that for right now, that normally we showed you the cookie box, right? And we said, this is our ETF. Again, a small minor downside to ETFs is right now in a Bitcoin ETF, it's all Bitcoin. A couple different cookies in there, but it's still all Bitcoin. Same with Ethereum, right? Ethereum ETF, it's crypto, but it's only Ethereum. Can you imagine? I'm sure there's somebody out there working on making an exchange where you could have multiple Bitcoins. Maybe I should do that. Maybe I would be the rich guy. I'm just not smart enough. But just another important thing to understand that inside ETF, normally when we say they're diversified, it's still only Bitcoin and still only Ethereum. All right. So to recap, I want to read btcc.to. I'll read you straight from their website, the world's first Bitcoin ETF. You have no wallet requirement, digital wallets, keys, or converting to fiat. Skip the hassle of managing security of your self-custody yourself. Physically settle and safety held in cold storage. That means that this is not just a paper claim like Bitcoin futures. It's a real deal. When you buy an ETF, we buy real Bitcoin with your money. By holding this ETF, you actually hold Bitcoin in your portfolio. It's simple to trade, just like buying shares of your favorite stock. You can buy and sell Bitcoin seamlessly in your portfolio. Okay, so those are some statement right out of Bitcoin's ETF. And again, another cool point, they are TFSA and RRSP eligible. If you want, you can use your TFSA and RRSP to save on taxes. And remember, that was the title of our video. How do you get crypto, Bitcoin, and Ethereum tax-free? That's how. All right, so btcc.to is eligible for registered accounts. Good news. All right, here we are. My cookies. Which cookie box do you like best? I'm not going to eat one because we're going to talk now. And this is the bonus I told you about if you stuck around to the end. All right, what are my top 9 ETF picks for 2022? So, I'm going to start from the bottom and work up, with the exception that the 2 bottom ones are actually the 2 that I've just finished talking to you about. So btcc.to at $8.85 is a crypto Bitcoin ETF. All right, so I would definitely hold that one. ETHH.to, Ethereum ETF, $15.11. It's the Crypto Ethereum ETF, okay? So that's number 9 and 8, and I put them at 9 and 8, but just because they're a little bit different than the other ones we're going to talk about. All right, starting at number 7, we're going to work up to number 1. Hang in there, we'll get there. Number 7, ENS.to. It's an Enbridge call option, and it is at $14.56 and pays a dividend of 10.81%. Wow, that's a good deal, right? All right. Number 6, VCE.to. It is at $45.96. It has a dividend of 2.88, and this is a Vanguard growth ETF, okay? The next 2 are also, so I have 3 here that are Vanguard. They're all growth ETFs. All right. Number 5, VSP.to. It's at $78.48. And it pays a dividend of 1.09%. Number 4, VEQT.to. It's at $36.59, pays a dividend of 1.32. All right, so it's 4, 5, and 6 Vanguard growth ETFs. All right, number 3, we're getting there. TXF.to at $21.93. It has a dividend of 8.11%. And that is by CI Tech Giants. It's a covered call ETF. I can see we're definitely going to have to make a video on covered calls so everybody understands that. All right. Number 2, this is the runner-up. ZWB.to, $22.33, 5.31% dividend. That is a BMO covered call Canadian Bank ETF. Yes, that was the one we told you that was doing well, right? And number 1, last but not least, my number 1 pick for 2022, BTC.to, $7.61 per $7.61, and it is paying a dividend of 15.65%. Wow. Now that is a new fund. I will give you that. Not a long history yet. But if it pays out 15% even for a few months, that is huge, right? So that is Purpose Bitcoin Yield ETF. So I'm curious to watch that one. That's why it's my number one. Imagine 15% yield on an ETF. That's huge, because not only if that ETF goes up, so if people start seeing that thing there, they're going to see that huge one, and I bet you that stock will go from $7 to 51, the cost of that. So you're going to make interest on that. So btcy.to, number one. Yes, I like it. All right, so that's what I wanted to give you, sort of my stock picks for ETFs. Do you understand them? Yeah. You want to have a cookie? I wish I could send you a cookie. This is my ETF. Yeah, you are diversifying your portfolio. So I hope that we were able, with our little cookie demonstration, to explain it to you a little bit better tonight. So those are my cover calls in Brad's Bread and Butter for the ETF. All right. So as always, guys, down in the link below, in the description below this video, you're going to find lots of links. There's a link there for Wealthsimple, of course. If you use our link, you will get 2 free stocks, okay? So you can start trading right away. And as always, remember, when you go into Wealthsimple, we have a video on it. So please watch the video, because there's 2 parts to Wealthsimple. There's the robot management stuff, and then there's the second part where we trade stocks and crypto. So watch our video on that, then use the link below. Get your 2 free stocks. I love giving away money on this program, and it's not even mine. Wealthsimple will give you the 2 free stocks. All right. So don't forget to get your Wealthsimple account going. And the nice thing about that is 0 fee on Canadian stocks. We just finished talking about management fees of mutual funds and everything else. Use Wealthsimple, 0 fees on Canadian stocks. Okay. And also, why we love Wealthsimple? Because on the same platform, you can trade stocks and crypto. Beautiful thing to do. All right. So let's also remember that down in the description of the video below, we are really trying to help you to understand, remember, why we're doing this channel, right? I'm 60 years old, can't retire. Why? What did Brad do wrong? Don't be Brad. So down in the description below, you're going to find several books that I have now read that have really helped me to understand finance. And you can click on the link below. It'll show you some of the good books that we really recommend. You can order them straight on Amazon. If you're like me, I order the audiobook because I have to drive a lot for my job. I go back and forth to Toronto every day. So I listen to podcasts and educate myself. Right? Part of improving your life, improving your finances, is you need to understand the difference of what's going on. Okay? Educate yourself and don't make stupid mistakes like I did. So learn about finance from using the audiobooks and the books down below in the description. And as always, if you enjoyed this video, we would ask you to subscribe and like it, because we're trying to make sure we get good content up here for you to watch. And it does cost us a little bit of time and money to make sure we're doing good research for you. Okay. And as always, if you could leave a video down there, just below this video, in the description below is a comment section. Okay. So if you subscribe, you can leave a comment. I would like to know what ETFs you've got. Which ones have done really good for you? Share that with our readers and our subscribers. That would be great. We'd love to hear what you're doing. Maybe you got burned on an ETF. Let's share all that stuff. As you know, on this channel, I tend to share the good and the bad as much as I can find so that you make an educated decision, right? So, you want a cookie? Yeah, get your ETF going and make sure you're diversified. Saves you a lot of time doing the research that we do when we pick our stocks, right? Because really what you're doing, you're paying somebody else to get the right cookie in the ETF. And I think it's time for me to eat another cookie. Hey, YouTube, it's been great having you here today. Thanks so much for joining us. I appreciate all of you. And remember, keep it in the green, because you don't know what you don't know. And I'm going to say goodbye while I eat my cookie. So So have a good day. Have a good weekend. We'll see you again next time. Monday night, Rachel and I are live. Join us. Appreciate you all. Thanks, YouTube. Bye.